Welcome. This video is all about market structure, how to use it properly. If you're not a profitable trader, then there's probably one of two things that you are doing wrong. One of them might be your risk management sucks. The other might be you don't know how to utilize market structure correctly. So if your risk management is great and you're still not profitable, then listen up because you need to learn market structure properly. Doing your market structure correctly will give you a bias in a certain direction where you can assume that the next trend continuation move will be in that direction. So I'm going to show you guys, starting from all the way back here, all of the market structure leading up until the current price, so you guys can really get a grasp of how to market in properly, know when there's a shift, know what direction to be looking for a trade and where to look for that entry, assuming that that move is going to continue in the market structure's favor. So let's get into all of this. I'm going to start way down here. We'll zoom in just a sec. Just a quick shout out to my affiliate exchanges before getting into everything. First, there's Bitanex Exchange, allowing US customers no KYC, no VPN needed, and allowing crypto trading for anyone in the world. So check this out if you aren't allowed to use Bybit or BingX, my other ones. These guys are good. BingX Exchange, awesome one as well. Cool thing about them is that it's not just crypto. They have all the crypto pairs, but also Forex, indices, commodities. So check out BingX if you like to trade a variety of markets. And then there's good old Bybit. Everyone knows Bybit. So crypto exchange. Issue with this for some people is that you do need to use KYC in order to use Bybit. Okay, so just know that you'll need KYC if you want to use Bybit. All right, so let's get into market structure lesson. And starting down here, let's take a look. So when do we actually find a break? Well, how do we even draw in our market structure? What is swing high, swing low? Some things that you need to know. So first of all, basics, and we're going to get to the actual market structure. I'm going to put in all of it, mark it all out properly. First, you need to know just short-term swing highs, short-term swing lows that are all of these green arrows. And note, this is not the market structure that I'm going to be talking about. This is part of it though. So you need to know this short-term swing highs, short-term swing lows first. These green arrows that are marked here above and below the candles are important because they're going to help us identify what is actually a valid pullback to look for a market structure shift or break on. And we need to see a series of these within one pullback in order to classify it as a valid pullback. Okay, so I'm going to explain that way more and show a ton of examples. Just bear with me here because there's quite a bit to go over when it comes to marketing your market structure incorrectly and knowing when market structure has shifted or broken in the right way. So these are simple. All they do is just mark areas, mark a high of a candle where the left candle is a lower high and the right candle is a lower high. So that's a short-term swing high right there. Short-term swing low, just the opposite. So we have the middle candle making the lowest point, candle to the left, candle to the right, both making higher lows. So this is the Trade Pro market structure indicator. We're just marking these in so it's easy to see. You don't need an indicator to do it, but I'm showing you because it makes it easier to understand, to teach you guys, and easier to identify when looking at the chart. So short-term swing highs, short-term swing lows, right? It's going to be important because we're to mark our actual market structure breaks and our proper market structure, we need to know that the pullback is valid. And so what will make a valid pullback to then begin marking our market structure, we need to see that there's a short-term swing low or swing high, followed by another short-term swing high or swing low, another swing low, swing high. So a series of short-term swing low, swing high, swing low, all within one pullback. Okay, so for instance, we can look over here, see how this pullback begins. We get a short-term swing low here. Then within this same pullback, before making a new low here, we then get another short-term swing high, short-term swing low, short-term swing high. So we have a series of short-term swing highs and lows all within one consolidation or pullback without breaking that initial one to the downside. Okay, on close as well. That's important. So this is a valid pullback here. This is a valid pullback, and they're separate pullbacks. So why are they separate? Well, we broke down on this candle here on close. And so at that point, that is a breakdown in structure. So that is a structure break. And this is the structure. All of these short-term swing highs and swing lows. We don't really care about all these little ones. This is the main structure that we're actually marking for our trending bias. Okay, so once we get that, okay, we know we've broken down. The assumption at this point is that we're going to see, or maybe we see a pullback, but at least we're just assuming trend is going to then continue to the downside. If there's a pullback, we're assuming it's going to then continue down. And so we can mark in the high of this current structure here. And so we want to go look at the point that was broken. So this candle closed below this low here before our series of short-term swing highs and lows. Closed below that range. And then we can take a look. Okay, there's our low of this pullback. This is the high. So we're looking over to the right side. The highest point before that breakdown. So between this low, the highest point for our breakdown. Okay, so that's this high right here. And then all we're doing is assuming that once we've broken down on close, that a pullback into this territory or whatever it does after breaking that is we're going to see that lead into a follow through down. Okay, once we have that bearish structure break to the downside. So you can look for a short by whatever means that you see fit. Once you have a swing low formed, short-term swing low forms after the break, then you can start looking for a pullback, whether it be to a Fibonacci level, a reset on your indicator, bearish divergence on a lower time frame, or whatever other means that you want to look for a top in this area, assuming that we won't break this high on close. So we can wick it and then continue down, and that still holds structure to the downside. Got it? So this pullback right here could have come up, wicked through, and then broken back down. So that would be a swing failure or a fake out move, whatever you want to call it. A sweep on that high before continuing lower, that can happen, and we'll probably see some of those in all the examples I go through. So let's say that you shorted this at midpoint of this move here, and then look for that continuation. Great, that worked out in your favor. So cool. What do we do next? How do we continue marking our market structure? Well, so we put in this short-term swing low, then we have our series of short-term swing highs, swing lows, right? So we're going up here, short-term swing highs, short-term swing lows. So this is a valid pullback. And then we are just looking for then this one to break down. So this is our new structure low here. Once we break that level, so this candle on close here closes below that level. Now we have, again, our new structure here. So this is the high that forms our new structure. It's our lower high in this down trending environment. And so that is what we're expecting to then hold if we're going to pull back after breaking down. So then let's say that you want to short and expect continuation down, because you should. So we look for potential pullback. So we get a pullback here. We go down a little, and then we go up, so it fails, right? So this is important to know when this happens. And you want to keep trading in that direction of the structure, because it's going to keep going more times than not. And you'll see that here in just a sec. Okay, so now we're getting into a shift, right? We saw that this is our structure right here. We already broke down here. This is our new low. And then that high is the structure that needs to break in order to shift this trend, okay? And so we see it break over here on close on this candle. So as soon as that happens, we say, okay, we now have a break in structure. The trend is shifting. Now the expectation is going to be continuation to the upside. All right. So we get our swing high here, short-term swing high, then we get a series. Okay. But we actually don't have any opportunity to enter long here because it doesn't pull back enough. But the idea would be, let's just say, just for example, so we get our break right here where we get that structure shift. We break over, or maybe it's on this candle, whatever, either way. And then we pulled back like this, right down into this area. And then you got a buy signal here. That would be great. We have bullish structure. So you're expecting that we're going to continue higher out of here. This one just didn't pull back all that much before then going higher and creating some new structure. So let's mark in the new structure. I'd say that was not a good buy signal because this barely pulled back after the break in structure, okay? Continued higher pretty quickly. And we actually got the new structure that I talked about. So let's put this in. See how we had this series all in one consolidation where we go swing high, swing low, swing high, and then we get another swing low and break out of there. So that meets our criteria for a valid pullback to create structure, okay? So we're actually going to be marking then when we get this and it breaks to the upside. We don't have an entry yet. Unfortunately, we can buy the pullback after that initial one, but it's okay. We can then look for a new setup. So we break this current structure. This is our current structure now over here. Close above this level where we saw a series of high, low, break to the upside here, close. Now what are we doing? We're switching from the shorting over here. We wanted to buy here, but this time we actually can buy. So what was our lowest point between this high and where we broke the structure? Right here. So that's where we can then look for a potential pullback, whether it be a Fibonacci or a pull, like regular bullish divergence, hidden divergence, whatever you want to do. I like to use divergence and other factors, resets on stochastic RSI, things along those lines. But whatever you want to do, it's just this is a common way to do it. So then up here, when you start getting a swing high, first one is right here. Put in another swing high up here so we can adjust our Fibonacci tool. Look for that pullback, and we're assuming that this is going to go higher out of here, okay? So this pullback is for buying, and we're assuming it's going to hold this low right here. Now that we have the structure set, we want to just be waiting and looking for a setup, a buy setup, to then look for that next move to the upside, right? And what do we get? We do get that move. So where do we now shift our structure again? And we change where we're marking our structure in. Let's get rid of our drawings here. So here's the low, the high, we break it on this candle. Okay, so our new low of structure is right here. This would be the one to break currently. As of this candle here, this would be the low to break now. This closes over the high here. And now we can look for another potential buy. Okay, if we were to pull back here, we would look for another buy. We take off. Okay, so this does not give another buying opportunity. Luckily, it gave a great buying opportunity right here before that huge move. Okay. And there's no reason to think that this is going to be going down yet because we don't have any bearish structure shift yet, okay? So we're just assuming that this is going to continue with this bullish trend. And so we can then look, remember what I was talking about with a valid pullback to look for structure, a series of these short-term swing highs and swing lows. So we get it right here. In one consolidation, we go swing high, short-term swing low, short-term swing high, short-term swing low, right? So then we can start looking for a new break there, okay? So let's put it up there. It's where the pullback begins, right? We go short-term swing high, short-term swing low, short-term swing high, short-term swing low, short-term swing high. We try to get out, but we fail with a wick. Short-term swing low, and we break it. Okay, great. So we broke it to the upside. Now what are we doing once we break to the upside here on close. Well, now we're marking in the lowest point of this particular pullback, where we got our series of short-term swing high, short-term swing low, short-term swing high, short-term swing low. And so now we can then put in whatever, if we're going to use a Fibonacci or look for a lower time frame bullish divergence here, whatever you want to do, just a pullback into this range, whatever it's going to be. But let's just say you're doing Fibonacci. It's the easiest for me to demonstrate with. So looking for a buy at that 50 level or below. So we're looking to buy here, assuming that this level is not going to be broken down on close. So it could wick it, but if it breaks it down on close, that's a valid now bearish structure shift, and then we'd start looking for shorts on a pullback. But that doesn't happen. This works out nicely. So we can buy here below that 50 on the Fibonacci midline, buying here, expecting that we go higher and that we're going to hold this level. Okay, and that's what we get. So we go higher. Now we have new structure because we broke to the upside, and this is a valid pullback to create new structure. See, we have series, short-term swing high, short-term swing high, short-term swing high, short-term swing low, short-term swing high, short-term swing low. So we have a series of up and down here for our short-term swing highs and lows. So we can now put in our new structure, the highest point here, and the lowest point of this consolidation before the breakout, right? So this is our candle that breaks it, where we bought here, we bought here, didn't get a good buy setup from this one, but if maybe you just bought right away because of the structure break, who knows? But great buy setup here, great buy setup right here. This is going very well. And then we have another break to the upside. So what do we do now? How do we look for a position to then go higher in price, expecting that we continue higher? So let's put it in here. We're going to get our break right here, right? We get a short-term swing high. Then we start looking for a pullback, potential for a pullback, so we can get an entry, a buy position on this during this consolidation. Let's mark our low here. So this is our low before the breakout, lowest point before the breakout. We don't come down to the 50. We get a wick up, but we don't break structure to the upside here. Just a wick, not a close. And then we come down to that 50 during this consolidation. That's a buy right there. So you can buy right there at the bottom. Below that 0.5, you don't know it's going to be bottom at the time, of course, but you can buy that right there. So that's a valid buy. Expecting we're going to go higher, okay? Expecting that we're going to hold the structure down here, right? And what do? We then take off to the upside. New structure, so we got to mark it in. We break to the upside, that's success right there. So let's move everything. What's our new high? Well, this was our high right here to start the pullback. We broke it. This is our new low. So this is our new low of structure. Once we break that on close, which we happen to do on this candle, that's our new one. And so then we're going to be looking for swing high or series, taking profits in this area on any longs from that one. Let's mark it in. So do we have a series here? So no. We do actually. So this is weird because we have this long wick, but technically this is all a range right here. We're ranging. You could look at it on a lower time frame. It looks funny here, but we do put in a short-term swing high. We have a swing low, swing high. So we get that little series of at least 3 here. High, low, high. Then we go and we break it, okay? Don't get another pullback, though, here to get another entry. So we're going to have to adjust here. So we break it on this candle. Here's our new low. Not sure. Let's see. There it is. So our consolidation lowest point of this consolidation that went sideways here from this candle to our breakout point to the upside right there. And then we can put that in for our Fibonacci. Do we get a pullback? Not sure if what happened intra-candle, but there's maybe a potential there on that pullback. Once we get that, maybe no entry here, but we have another consolidation. So we can put in our new structure here. So let's move things again. We get another more up and down pullback here, multiple short-term swing highs and swing lows. So we're ranging here, right? And then we break out. We're still just assuming continuation upside, right? We break out here. This is the new range that we're looking for a higher low in. So after our breakout, that's the low of this particular range. We have the breakout, and then we can look for a pullback, which we get. And we're assuming higher compared to here. So we get it on this red candle. It's a buy. And we go higher. Okay. So now we have a new one. So once we then see this new one, when we break out of it, let's mark it in. It's the high. And then we only mark in the low once we actually break it, which happens right here. So this was the low that ended up being the low. That was our buy as well, expecting that this would happen. And so we break right here, and then we get a little mini pullback. Go higher. So we have a bit of a up and down situation right here. This is new structure. Don't think we get a deep enough pullback here to actually get a buy from our previous breakout. I can check. So this was the low. We break out right here. Yeah, no, there's no entry if this was your entry criteria using Fibonacci. There was no entry from that one, but we were already long from down here. So we get that whole move up. Then this break right here, there's a little pullback, which would be a buy as well, but it was just didn't come down far enough as far as if we're using at least, buying at that 50 level, pretty standard territory for just discount versus premium. Want to be buying at a discount, as I've said in almost all my videos ever, trying to buy at a discount. And so here's our new one. We break it right here, this candle, right? And then we're assuming that this is going to be our new low that holds until it doesn't. And finally, so we can buy after that break. We break right here. We look for a pullback. So you could be a buyer here. And remember, on close. So let's say that you did buy down here in that bottom half of the range. We get a really great bounce up. So even though it does end up breaking down, you do get a nice bounce to the upside here before we actually end up breaking down. So there's that potential where you get that stop loss to break even or take partial profits if you longed it in that bottom half of that pullback or of that range. Okay, so now it's important. We just broke down for the first time since all the way back here where we broke to the upside. We were in a steady uptrend, no reason to be worried at all about downside. So now we have some shift. We have a shift. And so this is where you start thinking, wow, okay, we need to now be anticipating the potential for downside. And so where do we break down this candle here, right? Here's our breakdown of structure. What was the high before our breakdown? Right? It's here, the high before the breakdown. And then we're just looking now for a lower high and a lower low. Now that we've shifted, so let's just check this out. What happens? We break down, We pull back, come up to a sell territory, shorting territory right here, ends up being the top right there, and we continue lower. Okay, so what's our new structure now? So that's success. We go lower after getting our short set up, and then we have a new low. New high. We break the down there. Okay, so now what do we expect? We just broke down on close again in this current structure here. Now, what are we going to be doing? We're going to be looking to the high here of this particular range. Looking for that pullback, expecting that it's going to make a lower high and not break above that high, and then go lower. And that's exactly what we do. We get a good sell setup as well. That's second one. So even as we get into what we now know is just a choppy range, we still have good setups here, profitable trades that can be taken here. So we're shorting right here. We go lower. We break down. Okay, so as anticipated, expecting that we're going to break down. Okay, let's take a look again. Now we have a new range right here. We break down. So this is our high before the breakdown. Oh, it's starting to rain really, really hard. Hopefully my power doesn't go out. There's a huge typhoon coming through here in the Philippines. Always have to deal with this a couple times a year. Waves are amazing though. Really good waves at the beach for skimboarding, surfing. But anyway, so we break down right here. This is on close. What do we expect? Pull back and then lower. Well, now we know it doesn't end up happening, but in the moment, still going to be looking to short this. Right? So where do we get the short? We actually get it right here. So you successfully get a short right here at that 50, and then we get a new lower low. So it still works out in your favor, even though it ends up not working, as if you were to just look at this without being precise with your marking of your structure. So this ends up working still. And just in case it wasn't clear, let's just shout it out again here. So this is our current range. We break down right on this candle below the low of this pullback with the multiple short-term swing highs and lows. Break down, pullback, assuming this pullback here is going to be lower high and then continuation lower. So then we're looking to short it. And just happens to be 0.5, comes to that level, and then we go lower. Okay, so it works out perfectly. We go lower, make a new low, and then again. So we're looking at our new section, but we first need to have our multiple swing high, swing low, such and such. So we did break down there. And so we're still, since we don't have the multiple ups and downs, this is still our swing high. This is still the structure that needs to be broken to the upside, okay? So it has not changed yet. Even though, we got that sell setup there and broke down a little more, which is kind of a rare setup where this happens, but this is still our same structure that needs to be broken. So what happens? We go up, we go down again. Maybe you shorted it again there because we still have the structure intact. So you got a short here, it goes down for new lows, pulls back again. Maybe you shorted again with some bearish divergence here, goes down. Stop loss to break even, maybe partial profits, ends up eventually coming up and then taking out that high. So that's our break, okay? So this is a good one to learn from because it's kind of a funky one where you get that setup right here where you could short that, get a win, short this one, potential for a win or a break even, and then we still come up and we break it, okay? So even though it's kind of wrong, it still was kind of right if you played it properly. So where do we just break our structure to the upside here? Now we have another shift right here, this one here. And then we have our low over here before this right here where we break to the upside. So we break it. Now we're looking for a higher low compared to here on close. So what do we do? Look for a buy on any pullback here. So don't come down to that 50 until all the way over here. But during this time, we do have some pullbacks here. Thing about it though is that we never break to the upside. So we get some of these short-term swing high, short-term swing low, all within one pullback, which could be a valid pullback. But then we never actually break to the upside on close here, okay? So this is still all the same structure. That's why we don't change anything. And then we look for this pullback here to come to that 50 or lower, if that's what you want to trade based on. I would use divergence or hidden divergence or regular divergence or a reset, stochastic RSI or something along those lines. But you can do whatever you want. Look for that pullback there to a value territory. Maybe using order blocks or fair value gaps, things along those lines. Do whatever you want to do, but buying here is the idea, looking for continuation, and we get it, okay? So we get the bull structure break, get our pullback, get our follow through, and that's success. So what's our new low and our new high? Well, we got to update things. So we broke out to the upside. What's the lowest point? Right there. Here's the high that we broke. Okay. So we're looking to buy. We want to buy. This is still bullish structure. We haven't broken down, right? So we want to buy on a pullback. We get a pullback here. We get a nice bounce, but it ends up failing. Okay. So we go down. We don't break structure. We don't get bearish until this low is taken out on close, which happens on this candle right here, okay? So we flip our bias. This one is broken down right here. Got it? Makes sense. Break down there, shift our structure. What's the high? Right here. High before the breakdown. Breaks on this candle on close. Then what are we looking to do? We're looking to short, looking for continuation down, okay? So let's go to our high before the breakdown. Look for a pullback. We get it right here to that 50 twice. And we get our follow through. So either you could short here, we go down, right? Go down again. So we break down for a new low over here on close. Here. Got it? So success, expecting continuation down. We have to mark in our new high here. This is where we broke down. So now we're expecting continuation down here again. So things haven't shifted yet, so we expect continuation down again. And so we're shorting again, bearish divergence, pull back to 0.618, 0.5, whatever you want to do here. Can short this. It's fine based on the structure. So we get a move down, but then we shift things to the upside again. So it's either a break even or a loss, whatever you want to call it. Doesn't always work. So we break right here. We break structure to the upside. This candle breaks it right there on close. And so what are we doing? We are looking for a pullback to be a buyer. And so we don't actually really get any pullback, almost nothing. But what do we get after this is this consolidation that breaks us out of here for a new high after this break in structure ends up being a multi-stage pullback. So we break structure during this, but then we have new structure we can mark in, so we can look for a trade over here. And this is very similar to when there was no pullback at the lows over here. So there was no pullback, but then we got another setup right here. Almost the exact same thing. And see how this is consistent because we're doing the exact same thing again and we get this a very similar setup. This is a consistent method to approach market structure. And so let's put it in our high. We go down, up, down, up. Kind of bob around here, put in some short-term swing highs, swing lows, all within one consolidation. Then we finally break it on this big candle. And so what's our new low? The low before that breakout to the upside. What are we going to do on this pullback? We're going to be buying it because we're expecting it to be higher than this low of structure right here. And so we buy down here, okay? Whatever method you want to do, we're buying down here based on this. And we're expecting we're going to go higher, which we do. We actually go all the way to the highs. That's a win. We don't actually close above it though, okay? So we come all the way back down. So we don't break structure to the upside here. We do wick it. So we, have great opportunity to take profits here after a huge move to the upside here and a great risk to reward ratio because we have such a tight stop here. So that's great. That's a win for sure, big winner. And then we come all the way back down. This is our new high. But we only know it's our new high once we break down right here, okay? So we actually break it on this candle, and now we flip our bias again to shorting. And so let's look to the highest point before the breakdown. This is our highest point before we broke the structure right here, right? And so now we're going to be shorting pullbacks. Do we actually have a deep enough pullback here? I would say absolutely not. So sure, you can start small. Or I don't know how you position yourself, but I'm going to say you didn't get a short position right here. If you're looking at this whole range here and looking for a bounce to at least 50% of the way up, that's quite a ways off there. We only got about 25% up, not 50% up. So I'm going to say we missed out on a short right here, but good news is we break here and then we go into a complex little pullback here with the short-term swing low, short-term swing high, low. So we're bouncing around, bobbing around in here. And so we can actually put in, okay, we have another valid pullback here that if we see it broken down, we can then look for another trade setup and readjust our structure. So what do we get? We break down right here on this candle. It closes below our little consolidation pullback area here, and we're in bearish structure, remember, until we're not. We're in bearish structure, expecting bearish continuation until we're not. And so let's draw it in, the high. Do we have a deep enough pullback here? Sorry, let's get this lined up. So we come down and we pull back. We put the lower high, we short this right here or here, either this one or this one, depending on what you're trading based on, but we're shorting, we want to be shorting this, looking for a move down. And so we get it. That's the right setup right there. That's great. We have a proper setup and it breaks down. Fantastic. So what's our new low and our new high? Okay, so here's a new low, our new high of structure, breakdown right there. Get another pullback. Does this actually pull back enough? It doesn't look like it, but we'll see. Nope. But we expected that would then put in lower high and then continue lower. You're already in the trade from here, so from up here. So who cares anyway? You're riding this down. There's no reason to shift bias at this point. So you're already in that. It's fine. It's whatever. We get the structure, a new structure right here. So we have a little complex pullback. So we break that down. Now let's draw in our new structure. So here's the high before the breakdown of this current pullback right here. So we bob around with our short-term swing highs and swing lows. break it right on this candle. Then what are we doing? We're looking for the pullback. Okay, so let's put in our Fibonacci. So we're shorting it anywhere up here above this 50, looking for bearish divergence, whatever methods you want to use. Maybe do fair value gaps right in this one right here or in here, whatever you want to do. Shorting this, just expecting it's going to go down, continue lower, and not break above this high right here, which it never does. Pulls back, beautiful setup. We expect it goes lower, it goes lower. Fantastic. Okay, so that one works out beautifully, and we have a new structure. So this one broke down. Where's the new high of our structure? It's right here. New high of the structure right there. We break it down on close right here on this candle. And so we're looking to short a pullback again. Now we already know that this one doesn't work out as favorably, but at the time, and there were other signs that you didn't want to be shorting this, such as the higher time frames. We just did a swing failure right here. We just came down to this huge consolidation low in the bull market. So I'm just, it doesn't mean you're going to short this one because it just took out the lows of this whole consolidation. But I'm just showing you for this lesson purpose that this would be looking for shorts just based on specifically this. Obviously, you wouldn't want to short this. It just came down to the daily 200 EMA. We're in an overall uptrend on the weekly and the daily. So it's just for just this 4-hour structure, this is still bear structure on the 4-hour, okay? And we're going to show where it shifts. So let's get into it. So we broke down. This is our new range that we just broke down out of. And this is our new area to shift structure if we're going to shift it, okay? So takes a while. Could have shorted it if we weren't looking at any other signs and we're just blindly shorting purely based on structure. Then you could short it right here. Here it goes down. We get a couple down moves, right? So that's fine. But then we go up and we actually shift structure to the upside. Okay, so we break the structure on this candle, breaks and closes above it. So now we're going bull mode. We're expecting continuation higher. So where's our new low? And let's put it in. Our new lows down here. Lowest point before that breakout in structure. All right. Then we get a little complex pullback right here. Does not pull back enough. So just like some of the other examples, this pullback here after breaking, or this one here, that pulled back after we broke the structure here, doesn't pull back very much. So, maybe you want to buy there, but for me, I just like to wait for a little bit lower to buy. I'm a little bit more conservative on my entries, trying to get best possible price for entry. It just doesn't come down that far there, but it's fine because watch what happens. We go up, get a more complex pullback. So we have a new structure that we can put in, right? Once this breaks to the upside, and we saw that we got a little bit more of a complex pullback here with the multiple short-term swing highs and lows strung together here in one pullback, right? Right here. Swing high, short-term swing low, short-term swing high, short-term swing low, short-term, blah, blah, blah. Over and on again. And then we break it to the upside. So what are we doing at this point? Well, we are looking for pullback to be a buyer, and we're already to current price action now. So let's draw it in. Here's our low. So we break it there on that candle there. Looks like we came down to that territory, but we did get actually a new bit of a pullback here with some stringing together of short-term swing highs and lows. So we actually don't really get a proper setup here unless you were buying, unless you bought right here because we broke on this candle here. you could have bought this pullback, could have bought that pullback there and looked for that move to the upside, which would have worked. But personally, I would have waited for a bit lower. I probably would have entered around here or here, didn't quite make it. So I would say I did not get an entry on that pullback, just based on this purely on structure. And then we get another complex pullback right here with our strung together swing highs and lows, which the low of is right there before the breakout. This was where we look for the breakout, which actually happens to be the same candle that made the low, breaks out of the high of this little pullback here. And then we look for a higher low. So we go breakout, pull back to 50. Could be a buyer right here. We go up, but we don't break out for a new high, okay? So potential for break even or a loss on that one because we come all the way back down and we break bearish here. So currently, as of right now, structure on the 4 hour specifically would tell us that we will see more times than not a lower high compared to here and then follow through to the downside. So we're not really at that halfway point, but the idea would be if we weren't in, an overall uptrend or overall or EMAs and such, but if we were just using structure by itself, we'd be looking, and more times than not, structure by itself will be right. So this right now is more likely to go like this and go for a new low, at least for one more. So that is the setup that we're seeing right at this moment live price action. And it doesn't mean it will happen because there are multiple time frames involved here. And I want to use this as an example. No matter what happens right here. So remember, this is where we just broke structure down on this 4 hour time frame. But if we look at maybe another time frame, we didn't even break down yet. So it matters. Time frames matter. I just kept it to the 4 hour, but I would use a multi-time frame outlook. For me personally, since I'm not trading just on the 4 hour only market structure, even though we have bearish divergence coming up here, I just am not shorting Bitcoin in general right now because I look at the weekly and the daily and I gather my bias on multiple time frames to determine if I'm going to be taking shorts or longs. So right now I wouldn't short this, but the 4 hour says it's more likely to go down for a lower high here and then continue down a bit lower at least. So there's that potential that happens right now. 6 hour says no because we haven't broken down on close yet, but maybe it does. Maybe it comes down and breaks down on close on the 6 hour. But purely for this video, this is a bearish structure break, valid. And so this anticipation here is to just pull back lower than this one, not to break this on close. So lower than here on close on the 4 hour, and then to go down lower for a new low. So that would be the anticipation right now based on this 4 hour structure. And so that is going to kind of wrap things up for this video. I hope there were enough examples here where you guys can grasp it and do it consistently and accurately. So that is structure. I recommend doing multi-time frame, but if you just do it on only the 4 hour, only the 1 hour, only the daily, only the weekly, whatever time frame you want to trade, I hope you saw in this video that just what I showed you on the 4 hour would have made money. This works. So more times than not, you get a great setup and you get huge moves in your favor. So it does work and you can hone it in even better. And again, with the actual entry part, I'm going to leave it up to you. You can do the Fibonacci, you can do the divergence, hidden divergence, reset on an indicator, whatever, fair value gap, order block, whatever you want to do, you can do that. But just keep structure at kind of the forefront of your analysis because it's so important. Okay. So that's going to wrap it up. Don't forget, check out my exchange affiliates. If you need a crypto exchange and you can't use any of the others because you're geo-blocked, your US or other countries that don't allow most crypto exchanges, they're not going to geo-block you on Bitfinex. So check it out. No VPN or KYC needed here. BingX as well, not going to require KYC, but you might need a VPN depending on your location. Bybit, unfortunately, yes, you will need to do KYC to use them. I'm lucky that I live somewhere where I can use Bybit and I do have KYC on Bybit, but for those of you who can't use it or can't use BingX, even though I like BingX a lot because of all the markets that they have, Bitfinex is the one to go for, so you can actually trade crypto properly without all the silly US regulations and high trading fees and stuff like that. So check it out with my link in the description. Thanks for watching and have a great day.